It's the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Dan Delmar, founder and president of Virtual Angels Network, a fully virtual national angel investor network that connects early-stage startups with investors across North America. Dan brings over a decade of experience as an angel investor and a solid track record in the innovation ecosystem. He's a founding member of the Harvard Business School Alumni Angels of New York, where he served as chief mentor and board member for 7 years, helping to strengthen the startup investment community. Dan, thank you for joining us.
Thank you for inviting me.
So where are you calling from today?
So I live in the Seattle area now on Bainbridge Island. Moved from the Northeast 7 years ago.
And so tell us more about the origin and mission behind Virtual Angels Network.
Yeah, so as a follow-on to your previous question, that's where I am is relatively irrelevant given that Virtual Angels Network is totally virtual. And
Absolutely.
we cover all of North America. Were you asking about the origin?
The origin and mission is always fascinated me. Is how did it come about?
So I have a long history as an investor in public companies in innovation businesses, such as buying Microsoft stock in '85, and I hold on to that and other individual investments for literally decades. So I've had 4 public company high growth opportunities that have returned me 100 times each on my investment. 15 years ago, as you mentioned, I was a founding member of Harvard Business School Alumni Angels of New York. And that got me started on angel investing. And I like the way that HBS Angels does business because it's a lot of teamwork through sourcing, screening, the pitch event, due diligence. But then at the end, it's a choice of each individual investor. And when the pandemic came and I saw that things could be virtual and therefore cover opportunities, investment opportunities all over North America, I decided to start Virtual Angels Network, pretty much modeled on the same things I just described from Harvard Business School Alumni Angels, except the difference is you don't have to be a member. You don't have to be an alum of a Harvard University school. It's any accredited investor. And that was 4.5 years ago, and we have been going strong ever since.
Cool. So as you've been doing this, what trends are you seeing in the online angel group syndication world? What's going on here?
Well, I think there's a lot of syndication efforts. There's some newer groups who effectively do syndication between member groups. And I think there's much more interest in syndication. And that's the flip side. That's the positive side of a less positive trend, which is, I think, less investment by angel investors. I think the numbers show that, and I certainly see how there are not quite as many angel investors as there were a few years ago, and they're not doing as many investments. So companies need to reach out to many different angel groups, and that's where syndication helps.
Cool. Well, so what makes a founder stand out in virtual pitch environments? I know what it is in person, but what do you find is different online?
Well, what I'm going to say is a little surprising, you might say, for someone with my background. My career was as a strategy consultant, so I'm very much into the fundamental business of big companies, small companies, whoever. But because pitch environment is such a short, superficial opportunity to get people's attention, I find that the investment aspect of it which communicates to everybody, regardless of their industry, every potential angel investor, regardless of their industry background, which is not going to fit most of the companies who happen to be pitching. At least for us, because we're one of the groups that are multi-sector. We're interested. Different members are interested in many different sectors. So something that gets their attention is the terms, the financial terms. So I still find, despite the fact that what I was just saying in the previous question, that it's a tough environment, I still find founders pricing their round high. A lot of founders, too many founders. So what gets people's attention is good terms from the start. It doesn't work to put up higher terms and hope that you're going to negotiate them down to an attractive level for the investors. The investors won't spend the time. And similarly, in terms of the investment round, another thing that's very clear is some traction in raising money, because not many of us like to have the additional financial risk of investing early and then the company not being able to raise the amount of money it needs to go forward and succeed.
No, that's true. I find investors do not want to be in these deals alone. They want to know others are supporting it or coming in with them as well.
Yeah, and that's partially psychological, you might say, groupthink, but it's good to have other people's opinion. And it's partially, as I said, a logical financial thing of reducing your financial risk. The round not closing.
Right. Right. So how does Virtual Angel source and vet the deal flow? Where does this come from?
Well, that I think is our secret sauce. Not that it's a secret, but it's our real strength. So different members of Virtual Angels Network attend virtual events all over the country. A number of them every month, one of them is every 2 weeks. Some of them, most of them are every month. Some of them are every couple of months. And we go to them and we see the pitches from companies that they think were the best companies in their deal flow that they invited. Well, we see those companies and we choose the best of those, and we invite them to apply to Virtual Angels Network. And then we have, for each one that applies, and they put all the information on Gust. And we have one of our members who has some industry knowledge that's relevant, or a couple of our members do the screening and choose the best of those who have applied. And we pick the best 4 based on those ratings from knowledgeable reviewers, and we invite them to come to our pitch event. And so I think we have we've been very successful with this, and we get really good companies to pitch to us.
Cool. So what's your perspective on the founder investor fit in early stage deals? What are we looking for here?
Well, because we're a network rather than a fund, and our members come from a wide variety of backgrounds, the industry fit, which is, some networks and some funds are very industry focused, and that fit is extremely important, but it's not as important for us. So we like to, I'd say the fit is most important in terms of the impressiveness of the founders, of the team, and the traction that they have. That's what we're really looking for.
Good. So what's the tips for founders you have on closing their first angel round? What do you tell them to do to get to that first close?
Well, certainly, rather than spamming everybody in some investor list, finding the appropriate fit. As I said, for some, it's an industry fit. For many, we're not all interested in investing in medtech devices and so forth. So you want to do that, but then it goes back to the things I said. Standing out in a virtual pitch environment is start with attractive terms for the investor, and probably don't go so public until you've raised, you've got commitments from a couple of people. And if it's a big round, getting a commitment from a VC really kicks things off, even if it's not a large portion of the round.
You know, as someone who started angel groups myself, I've always looked at the building a relationship as a key component of this. Most people think it's just a transaction, but I did found most angels don't put money into things they don't really know who the person is. What are your thoughts there?
Well, we're not as deep as that, Hall. We because of the way we screen the companies that apply, there isn't one person to build a relationship with. I manage the process and I have some knowledge, but I don't have the deep knowledge of the industry that some of our members do. And they're the ones who rate and review the applications. So just the way our process works and the way we're structured, what you're talking about is not the same. It doesn't work as well. And in fact, it's just kind of irritating to me to get emails from founders asking me. They all ask for, oh, let's just have a hop on a call for 20 minutes, if you're interested. Well, I don't know if I'm interested. I tell them they need to apply through our website, virtualangels.net, and put all the information, including the terms of the deal, into Gust so that I can get a knowledgeable person to look at it.
Yeah, no, I always tell founders, you have to apply to these groups. You're not going to get anything until you do, because you guys get 100, 150 applications a month, and you just can't have a close personal relationship with 150 people. It's just not going to happen there. So we have to be realistic about it. And I find a lot of founders aren't really up on that aspect of it. They don't really know what the life is like. And if they did, they'd probably take it a lot differently as well. But
they have their perspective is one company that they're,
they're the only ones they have to look at.
Yeah.
So how do you approach risk versus opportunity in startup evaluations? What's your weighting there?
Well, one of the things one of the criteria that I tend to use is they need the company that's applying needs to have the ambition to be what we call venture scale. And to me, in numbers, that means $50 million in revenue by the fifth year. Without that, I see higher risk, because to get to anywhere near that level, even to get to 20 or 30 million, in most industries, they're going to need investment, additional rounds of investment after the angel round, which means VCs, institutional money. And the VCs don't look at anything that doesn't have the potential for at least $50 million in 5 years. So I see higher risk if they don't have a path to that level. I see, as we talked about before, higher risk if they're trying to get us to invest very early in the round. We're not big enough to be a lead investor, although we have done that, and I certainly did it at HBS Angels. So we don't like the financial risk of investing really early. But in general, it is a risk reward kind of trade-off. It's rare that you see a great company with high potential without either a lot of risk or unattractive terms from the investor point of view. We're always looking for the best risk reward trade-off, but there's no no free lunch.
So true. So, what are some of the common mistakes you see founders make in pitches?
Well, unfortunately, I see too many, too many pitches, I guess, but I meant really too many mistakes. So the most common one, and not that hard to avoid, is getting behind on the time. I mean, we all of these pitch events, virtual or otherwise, have time limits, and they're told what the time limits are ahead of time. But many of them get behind, usually talking too much about the product and not enough about the business. But whatever it is, they talk too much and they get behind, and then they don't have time to, they get cut off. In our case, we don't cut them off. We let them have 7 minutes to pitch and 7 minutes for Q&A, and we let them go into the Q&A. I don't cut them off. I warn them with 1 minute left. But that's bad also. If they cut, the Q&A is important, or in the case of other groups, being cut off completely and not being able to finish with your strongest points. So that's a bad one. Many companies, I mean, we're interested in technology companies, both medtech companies and IT technology. Well, so there's a lot of technology that a lot of founders in their pitch event use too much jargon and don't decipher the jargon for people from other potential angel investors with a background in other industries. They don't necessarily decipher it the first time they use a word. So that's irritating and kind of loses people. And as I said, too much talking about the product. They've got to discuss the business opportunities.
So true. So where do you see virtual investing heading in the next 5 years? Where do you think it's going to end up?
Well, I'm actually optimistic. As I said earlier, I don't think it's at its strongest point right now, but virtual investing, I think is the way of the future. And it allows us to look at opportunities all over the country and pick the very best ones. And it allows founders to pitch without traveling even into their own city, driving downtown for a live pitch event. So I think it's a great technology, and it works perfectly well for angel investing. So it's good.
Really? So what's your advice for new angels looking to join networks like yours? What do you coach them on before they join?
Some of them I don't get a chance to communicate this, but I'm glad when I do. Some of them that they just join without talking to me personally. But when I get a chance to talk to them personally, I'm kind of discouraging. First of all, some of them I need to communicate the basics about how you need to build a portfolio of these high-risk individual investments, angel investments, to diversify your risk and to have the 1 in 10 chance of getting a 10 bagger or higher, getting a good return that makes your whole portfolio. And then with the numbers, if we invest 80% of our investments, individual checks are $25,000. So if you need a portfolio of at least 10, preferably 20 over 3, 4, 5 years, that's $250,000 or $500,000. And that shouldn't be more than 5 or 10% of your financial investments. So that's $5 million investment you should have before you start in. I've seen too many who make one investment, or maybe they came to us because they made one investment with somebody they knew personally and it went okay. But then they realize after a couple, like 2 or 3 investments that, hey, and they don't pay off quickly. There's a 10-year investments for the successful ones, and they give up on angel investing. So they need to be committed, And it doesn't have to be a huge amount of time, but it depends how you do it. You want to select and build a portfolio.
Right. Well, that's good advice. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I think I'd like to pitch for Virtual Angels Network, which is I've described the great sourcing and screening process we use. The result is that I think we are the best virtual network for angel investors, whether new or experienced. We are the network for the angel investing network for discerning investors. We get the benefit of a great set of members, very experienced in our sourcing, our screening, our pitch events. I've had very good feedback on all of our pitch events, and it's not just the companies that pitching, it's also the Q&A and then later discussion that we have among the angel investors, really high quality. So we love to have new members, and any accredited investor is welcome to join us. Should I give my contact information for them?
Yes, please. How best for listeners to get back in touch with you?
Well, first of all, maybe preemptively, let me say that this is for the potential investors, and that is my email address, which is dan@virtualangels.net. dan@virtualangels.net. You're welcome to any investor to reach out with any questions or comments. That is not the way for a company to reach us. The only way a company can get through is by going to our website, virtualangels.net, going to the page for entrepreneurs, and going through the link there that will get them to Gust, where they can put all their application materials on. They have to do that in order for me to get somebody to rate and review them and potentially get invited to pitch.
Sounds good. Well, at the end of our time, I want to thank you for joining us today and hope to have you back for a follow-up soon.
Well, thank you so much for having me, Hall. I love the work you're doing too.
Thank you so much. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.